Hi YouTube, this is Elizabeth Joy coming to you in regards to three type of entities and an S Corp. First you have your sole proprietor, and then you have your partnership, and then you have your LLC. Sole proprietor or a partnership, they are connected to your social security number. You have no type of protection with those entities whatsoever. And that's the main thing in regards to the sole proprietor and the partnership. Now you have your LLC, which is literally its own entity. It has its own NPI, and what the NPI is typically is its social security number for that particular entity. So it has protection. It's pretty much one of the normal ones that someone would choose, especially if you're a single member, you're just starting out. It's awesome to choose that entity first starting off. Now you have an S Corp. An S Corp literally is not an entity. All an S Corp is pretty much is an election. Something that the IRS pretty much have permitted for LLCs to be able to be considered as an S Corp only by the reasoning of taxes. So you're going to be taxed as an S Corp, still an LLC, just taxed as an S Corp. And an S Corp, all of the entities, they have their own, their ups and downs or whatever like that. But an S Corp, being a tax election, you have your good and you have your bad with it. That's what people say, but it's just your choice. And with the S Corp, I'm gonna give you an example. If you make $100,000 in that year, and the IRS main thing with the S Corp wants you to be paid, wants you to pay yourself a reasonable salary. And another thing too, you can work if you are considered taxed as an S Corp. You can work for your company if you're if you tax as an S Corp. And the IRS wants you to pay yourself a reasonable salary, because you're going to be playing whatever role you are in your, as a member, in your a manager member. You can be a manager member in your corporation or your S Corp. And so with that being said, you make $100,000, the government, the IRS says you have to pay yourself a reasonable salary. You pay yourself $30,000, then the $70,000 are the contributions or whatever that those deductions and expenses, all of that stuff. Those are going to be considered as your contributions. That is going to have the lower tax amount. So pretty much your salary that you pay yourself is going to be taxed at the regular amounts, and the 70%, which is the large amount, is going to have the lower tax, which is awesome. Can't get any better than that. And that's pretty much the difference between the S corporation. It's not an entity, it's only a tax election. That's it.